Alright, for this video I want to go over the Earned Income Tax Credit for the 2023 tax year. And in this example we want to talk about how you can have qualifying children that are adults but they are full-time students. So in our example we're going to have John, taxpayer here. He has one qualifying child, which is his 21-year-old son, who is still eligible as a qualifying child for this EIC because his son Alex is a full-time student. So we'll go over the Schedule EIC and then the rest of the 1040 for John here. And then we've also got the IRS publication 596. So we'll use this to look up the EIC tables. And then lastly have just one slide here covering some background on the EIC and qualifying children and specifically how it pertains to college students or other full-time students that might be your children. So when we talk about the EIC, it's generally going to be available to taxpayers that are lower to middle income and have children. Now, you don't need a qualifying child in order to claim the EIC. If your income is below certain thresholds and you have no qualifying children, you can still get the EIC. But in this example, we're going to try to claim the EIC for our taxpayer, and he has one qualifying child. Now, when we talk about what is a qualifying child for the EIC, it is a different standard than the qualifying child standard for the child tax credit. So if you're completing the Form 8812, right, that's for the child tax credit, that $2,000 credit, the rules for qualifying child there are different than what we have over on the earned income credit side. And the main difference is namely the age, right? So when we talk about child tax credits, the child has to be under 17, so 16 years old or younger in order to get that CTC. And with the earned income credit, you have a little bit more leeway, right? They can either be under age 19 at the end of the year, or they can be under 24 if they're a full-time student. So there's an incentive there to have them be a full-time student, and then their age increases a bit there. Now, the residency test is also a big one. A lot of confusion around this. So in order to claim the qualifying child for purposes of the EIC, the child has to live with you for more than half the year. Now, temporary absences are okay, and this includes going to school. So if the child's permanent home is your house, but they are away at college living in a dorm for that 14, 15 weeks out of the year, that's still okay. But in this example, we're going to have a situation where John just has his son live with him on a full-time basis. And then the last one here for qualifying child, they could be filing their own return. So if they did have a job and had some income, while they're living in your house, they might file their own tax return, and that's okay, but they shouldn't be filing a joint return. Now, there are, like everything, there are exceptions to that. So if they're filing a joint return with their spouse, they might still be a qualifying child if they're only filing it for federal tax refund claims, or if they're trying to get the American Opportunity Tax Credit. There are certain exceptions there, but for the most part, they can't be filing a joint return with a spouse. So in this example here, we've got John, taxpayer. He's a single parent. He's filing as head of household, and during 2023, John's W-2 income was $40,000 for the year, and he had $50 of interest income. Now, John's son, Alex, is 21, and he's a full-time student in college. Alex lives at home full-time throughout the year, and he just commutes to school, right? So he meets the residency test because he's living with his father. And he meets all the other tests, right? The relationship test, the age test. He's over 19, but he's under 24, and he's a full-time student, so he meets all of those tests. All right, so when we actually look at the return, what we'll see is that the earned income credit amounts, so the EIC amount on John's earned income is $1,044. The amount on his total AGI is $1,036, and so you claim the lesser of the two. So if we have a look at the return, let's start with page 1. So we can see here he's got Alex listed as a dependent. relationship to the taxpayer is his son. And then notice in box 4 here, we are not claiming any eligibility for the child tax credit because Alex is too old, right? He's not under 17 years old, so he makes him ineligible for the child tax credit, but he is still eligible potentially for the credit for other dependents, right? And so in this video, we're not going to look at that credit. We're just looking at the EIC, but that's something that this is what you will find when you have a college student as a dependent is you're not going to be able to claim the CTC. So he's got his earned income, $40,000 in wages, the investment income down there. And so now it's a matter of completing the EIC worksheets to calculate the amount of earned income credit. So schedule EIC. This has to be included anytime you have a qualifying child. If you don't have any qualifying child and you're doing the earned income credit, you don't need this schedule. Right, so in part 1 here, we've got the child's name, their social security number, and then the year of birth. Again, remember that is important because the age limits increase to 24 and under if you're a full-time student. So Alex here is born in 2002, so it asks if you were born after 2004 and the child's younger than you, then you could skip 4A and B and go to 5. In our case, he was not born after 2004, he's born before it. Right, so now we have to answer questions 4A and B. So 4A was the child under 24 at the end of the year, a student and younger than you, right, or your spouse of filing jointly, and the answer is yes. So we can go down to line 5 and complete the rest of the schedule. So child's relationship to you, his son, number of months that the child lived with you during the year. Remember, it has to be more than half. In this case, it's just the full 12 months. So now when we look at the actual earned income credit worksheets to calculate the amounts, we've got a 2-step process here. So the first one is to look at the investment income worksheet. So the reason why you have to complete this is because he has some investment income, right? He has some interest income during the year. And if you have investment income of $11,000 or more, you cannot claim the earned income credit. So what they ultimately get down to here is line 12, where it asks if you have investment income more than $11,000, you can't claim the credit. In John's case here, he's well under that, right? He just has $50 in interest, so he is eligible to claim the credit. He can move towards the next step, and so that's this worksheet here. So on line 1Z of the Form 1040, that's all of the earned income amounts on page 1. So if we look here, income line 1A through 1Z, these are all the earned income amounts. So W-2 wages, your household employee wages if you had any, and so on and so forth. In this case, he's just got the $40,000 amount. So we've got $40,000 in earned income report on line 1. John doesn't have any Medicare waiver payments that are being excluded, nor does he have any Schedule C income. So those line items are blank, and we're just working with $40,000 in W-2 wages as his earned income. So now we have to look up the EIC amount based on the earned income, and then we do the same EIC amount based on the AGI, and you take the lesser of the two amounts. So if we go to the publication 596 and jump down to the EIC tables, the way these tables work, on the left-hand side here, we're looking at where within these ranges does our income fall, and then you move over to the right to look up the credit based on the number of qualifying children. So he's got $40,000 in earned income. That's the first number we're looking up here. So we can see if the amount is at least this but less than that, that's our row. And so we've got $40,000 to $40,050. And so there's a column here in head of household. So 0 qualifying children, 1 child. So he's got 1 qualifying child. So we've got $40,000 even. So $40,000 to $4,050. 1 qualifying child gives us a $1,044 credit. So John goes ahead and he enters the $1,044 based on this earned income amount. Then he moves on to line 7, the total AGI for the return. So that's his W-2 wages plus the interest income. and that is coming from line 11 of page 1 of 1040. And so now we need to look up the amount from the EIC table for this value. So $40,000 and so $40,050. So if I go back to the publication here, so $40,050 would be the next line item down, $40,050 to $40,100. And so the new credit amount is $1,036. So $1,036 is entered on line 8. And then at the end of the day here, line 9, it's asking us if we checked yes on line 8, enter the amount from line 6. If we checked no on line 8, enter the smaller of line 6 or line 8. Well, the smaller one between those two is going to be $1,036. So $1,036 is entered as the earned income credit for John. If we go to page 2 of the 1040, on line 27, we have the EIC amount, $1,036. So that's the increase to creditable payments for John, so effectively increases his tax refund. And so that's all he needs to complete. And then remember, he does have to include the Schedule EIC because he is claiming a qualifying child. But okay, so that covers it for this video. I hope that was helpful. If you have any questions, please feel free to leave a comment below. As always, I look forward to seeing you on the next video. Thank you.